So it is May 2018, question 1. So we start indicating the, I've been asked for income statement. See. Income statement. It is for which company? Asuba Enterprise.
Yes.
So the year ended.
Okay, fine.
That first March. (2018). So we will not cut the zeros because I'm saying they don't have much zero. So we start with the, you put your shillings and then you put your shillings.
Okay.
So we start with the sales. We have the sales of how much?
Okay. Sales is 42,14,500.
42,14,500.
Yes.
We don't have the, do we really have the sales returned? We have purchases, electricity discount, purchase returned.
No,
so we don't have the sales return. So we go straight away to cost of sale. And the cost of sale, we will start with the inventory, that is the opening inventory of how much? It is on a trial balance, that is a 242,100. So I will put this one in thousand commas. Again, I want to put this one in commas so that get to differentiate these zeros. Then we have purchases. Purchases 16. 16,73,500.
Yes.
And we have, I see a purchase return, so we less the purchase return. Less purchase returned. You have done this thing, so we just confirming. Purchase return is ngapi?
Return is purchase return 6,400.
6,400. That is purchase return. So we less this one. We put this one in bracket. And again, we less closing
stock.
Closing stock. Closing stock of how much? We less a closing stock of. I said closing stock always will be available on additional information. So we go to additional information. Note number 4. As of that 1st March 2018, inventory was valued at 225. So again, I will subtract 25, 500. Give me the total value of cost of sale. So it will be 242 plus 24200 plus. So please confirm with yours. Hakuna mwenye anakuanga 100%. 600 minus 22. Umepata ngapi? Hata unaweza tumia ile ulikuwa umeshatumia.
Ipi hiyo?
Zile working zako, so ungekuwa tu unafanya adjustment kwa hiyo working tu hapo na different pen.
Okay. Oh, that will be easy for.
Yes, so instead of copying, so you just rub it, una indicate. Hiyo ulikuwa unapata total ya ngapi?
Gross profit.
Yes, the total cost of sales.
Total 1630 100.
1630 100. That is the total cost of sale. Then, so it will be in a bracket side.
Yes. Yeah, my car has come.
Give us how much? So the gross profit is so much. We have your gross profit.
2584.
So I will say equal to this one minus 63, 16, 30, 100. Yes, that one 25.
25 minus.
It is
2584 400. Yes. That's gross profit. Yeah.
That's gross profit, and that we had other incomes.
Yes.
We add other incomes. So in our trial balance, which income do we have? We have a discount received. Discount received. We have a discount received of 42,700.
Yeah, 42,700, right?
42,700. That is 42,700. So another income we normally check is if we have rent received and we have decrease in allowance for doubtful debt. So have you compute allowance for doubtful debt? If you check if it is increase or a decrease, we say increase is an expense, decrease is an income. So we have been told that is not number 5. A customer owing 50,400 has been declared bankrupt. So this amount is to be written off in full. An allowance for receivable is to be maintained at 3% of the remaining debt receivable. You go back to your trial balance. How much receivable do we have? So unaangalia. So let's do a small working here. So unakuja hapa. Our debt receivable tuko nayo ngapi? We
1101 400.
1101 400. And then we less the one which has been written off, that is 40 400.
50 400.
Yes. And then we multiply by 3% to give us how much? It will be 1104 minus 5400.
It's 31,530.
It will be
31,530.
31,500.
31,530.
Yes. So that is the one they want to give us a provision. Then you go back to your trial balance. You check their want. Provided. They provide allowance for doubtful debt, allowance for receivable as 1st April 2017 was that 530. So there was no increase or a decrease. So at that point, there is nowhere we will recognize what allowance for doubtful debt either as an expense or an income because it was fully covered. Okay, so you don't record anywhere that one because if you subtract that 1530 minus that 1530, it will be
0.
So we don't have increase or decrease. Then we less expenses. Expenses, I said, we start with the notes, additional information we are being given so that we don't forget. So we can start with the additional number 1. We have been told only 10 months salaries are shown in the trial balance. An equal amount is to be paid for salaries for each month of the 11th month, right? So we start with the salaries. That is the first adjustment. So if you go back to trial balance, tumepewa salaries, yes? 10?
Okay, salaries. 1080.
1080. Tuko na salaries ya 1080, 100. So we have 10,800. That is for 10 months because we are being given only 10 months. So each month itakuwa ngapi?
Divide by 12.
Yeah, so if we divide by 10 so that we get for each month, itatupea, it will give us 10. If we take 880, we divide by 10, it will give us what? 108,000, right? So let's do this working here. We say 8, we divide by 10, will give us 10,800. 8,000, that is per month. And then, so meanwhile, kulikuwa na accruals, the accruals for 2 months. So we multiply by 2 so that it make what? 12 months. So it will be how much times 2 to give us 216. 216,100. So that is what? That 216,100 is accrued for 2 months. So we should add back this value. So hiyo yenye wamelipa now, hiyo 8,000, you should add back this accrual of what? 216 and to give us the total expense for salaries angapi. So we will add here plus 10,8, that is 12,96,000. 12,96,000. That is the total salaries per year. Then we go to the note number 2. As at that first month,
okay.
You have a question?
What I did,
Yes.
I took 1080 times 2/12.
Times 2/12. What? You get the same figure?
No, I didn't get the same figure because 1080,000 times 2/12, I got 180,000. That is 41.
So you see, it was a just simple explanation. You see, in the trial balance, they given us salaries for 10 months, right? And we know the income statement, we prepare the income statement covering 12 months. So we want to know each month alikuwa analipa ngapi. So you could have taken that 10,800, you divide by 10 so that you get for each month. Then you multiply by 2 for the remaining 2 months. So you take the whole figures of 10 months, you multiply by 2. So you could have divided by 10, then you multiply by 2. Or you thought 10,000 is the for the whole year. That's why you divide by 12.
The idea was
Yes.
I took as for 10 months.
Yes.
Then I divided by the 10,800 divided by 12. To get each month, that was 90,000. Then I multiply by 2.
No, so you see there you frame your own question and you answer your own question. Because the figure we have been given is for 10 months. So if 10,800 was for 12 months, we could have done that. Yes. So let's go back to note number 2. Say, as of that 1st March 2018, 32,000 had been prepaid for insurance. So we can do that one before when we complete, we do insurance. So we say prepayment, tunafanyanga nini?
Prepayment we less
prepayment. So we have in a trial balance, we have been given for 154,000, we less prepayment of that 2,000. How much are we getting? We are getting 154,000. We less 32. 122,000.
yes.
Come to look from my. Huyu kulikuwa amelipwa pesa ngapi? Huyu mzame ndio. John anasema alikuwa niongea na wewe.
Alipa 10. That one is okay.
So 122, and then there is a comma. Well, 4,100 was owing for general expense. So we have now general expense here. So general expense will be, we have to remove, we add, when we say owing is accrual, so you go back to general expense in trial balance. 7,800, we add plus 4,100, but there is a note for relating to this general expense. Note number 3, we have been told 46,000 had been charged to general expense for the owner's private holidays. What is that?
Has been charged to general expense for owner's private holiday.
Yes.
Not an expense.
Has been charged to the general expenses for the owner's private holiday. You see, the owners or the owners of the company, when they take money from the business account, they think that that money will be accounted as if it is an expense for that company, but it is not an expense. So we need to remove that value in our records as a company, and we transfer that figure to their accounts of the shareholder. So basically, that one is a drawing. It should not appear in expense unless it is a drawings for goods. So we have to remove that 46,000 so that it gives us how much?
67,800 less add for 1 less 46, 25,900.
25,900. And then, so we continue with our additional information. So meanwhile, we have dealt with the number 3, number 4.
So number 5. What I did?
Yes.
What I did for general expense, I took 67,800 plus 4,100. Then I got 63,700. Then I came back again and took 67,800 less 46.
Less 40?
6.
Then how did, let me check. See, you have sent me that question, sir. So you took that was a general expense. You see now, it's like you account times 2, right? Because I'm seeing you take 67,800, you add back 41, 4,100, you get 63,700. That one was good, right?
Huyu Mabuya amesema anataka pesa ndio atuwekee hizo.
I was checking, you take that 68,800 plus 4,100, you put that 60 something, 60 or something. That one was correct, right?
Yes.
So you could have less that one private owners ya 46,000. You could have less that figure ulikuwa umepata. So unge less to direct ya 47 ungeipata, but
from 63,700.
Yes, so it's like you record it times 2. So you could have record just less that 46,000. Then we have dealt with the note number 5, but there is an
But from your record for general expense,
yes,
you've actually added 67.8 plus 41, then minus 46.
Yes, but you see yours.
Mimi nimekuelewa.
Yes.
It's only that your recordings you hauja minus 46,000. I'm only seeing 4.
Oh, you see in my CASA there is an hidden figure here. So are you able to see now?
Oh yeah. Yeah, that's right.
Okay. So we have note number 5, we have bad debt. We have bad debt. So in bad debt, there is the one which I have written off, and there is the one again which was in our trial balance. So you go back to trial balance, we have irrecoverable debts of 14,200. Irrecoverable debt of 14,200. And then again, there is an additional bad debt of what? 5,400. To part the total debts, bad debt ama irrecoverable debt ngapi? It will be 14,200 plus 5,400 to give us 64. Bad debt. We have irrecoverable debt in trial balance of 42,200. And note number 5, the customer owing 50,400 had been declared bankrupt. So you have to add that one, 42, so that we get the total value of bad debt. Using that note.
I'm in the trial balance. I'm trying to see the bad debts.
So after insurance debt receivable, there's irrecoverable debts.
Oh yeah, irrecoverable. So irrecoverable bad debts is an expense, huh?
Yes, irrecoverable debts is an expense. Bad debt is an expense.
So you add them.
Yes, in an account side, but if you go to taxation field, it's a different case. We only allow the ones which are specific, but in accounting, we just account for everything.
Okay.
And then, so we go to note number 6 is about land valuation. Note number 7. Note number 7 is the depreciation is to be provided as follows. So we have depreciation here. Okay, so depreciation, we can start with the building. Building, we have been told, note number 6, land was valued at 1 million and land is not to be depreciated. And if you check in our trial balance, we have the combined value of land and building, right? So the figure of building itself will be how much? So we will take 3.4 minus 1 million, and then since we have been told that this depreciation it was to depreciate on cost, so we will multiply by 4% so that we get depreciation value. I see you got these values, which it is good.
Hapo nimeshuka hapo.
So hapo umecheza. It will be 31 minus that one minus 4% to give us 96,000. Then we come back to again for depreciation for equipment. Equipment again, it is on cost. So we take the cost of equipment, which is 22.
220.
We multiply by 25% to give us how much?
55,000.
Then again, we go to motor vehicle. Motor vehicle, we have been told on a reducing balance figure. So we take the cost, which is 260. We less accumulated depreciation of 132,500. And we multiply by the rate of 40%. How much?
51,000.
51,000. So yes, we have dealt with the additional information. So you go back to now the beginning of your trial balance. Capital is not an expense, inventory is not an expense, purchases is not an expense. We have electricity expense. So we capture electricity.
Expense.
Electricity expense. Electricity expense is 22,300.
300, yes.
We go again, discount received. Oh, we have dealt with discount received. Discount allowed.
Yes.
Discount allowed is an expense. Discount allowed. We have a discount allowed of
24,200.
24,200. We go again. We have motor vehicle running expense. The vehicle running expense. Motor vehicle running expense yang ngapi? 15,800. And so we continue. Drawing is not an expense. Bank, salaries, we have dealt. Insurance, recoverable allowance, general expense. We have loan, that is 9% loan. So here we have interest on loan. Computer interest on loan. Can you give me the value of interest on loan?
What I did was a bit, I took it 9% of 1.5. Is it 1.5? Yes. Then less, is it? Interest is on, then less 120,000.
That's what you did in our income statement. So now get
as for me, I did something different.
So now get it. Income statement, as I have said, we only account for a period for 1 year, right?
Yes.
So when you are dealing with the income statement, don't mind with the interest they have just paid. So you just account for 1 year. So you take that, the interest rate you have been given, you multiply by the value of the loan, so that they give you the whole value. But ukienda kwa balance sheet is now that you come back and look at how much they have paid and how much should they pay in the should pay in 1 year. Then you see now balance will be accruals. But for income statement, you just account for the full year, which is take 9%, we multiply by 1.5 to give us how much?
135,000.
Running expenses. There's something I omit. Running expenses. So interest. 135,000, right? Then so I don't think we have any other expenses.
No, we don't.
So now we can get the total value of expense here. So I use this one, sum. And I can comfortably get my net income here. So how much is the total income up here? So we can get the total income will be equal this one plus this one to give us that one. So the net income will be this one minus this one to give us 71,719,300. That is the income we should. That's our income. Ulikuwa umepata ngapi? 18 something, eh? It was a big value.
1822.
Yes, it was a big value. So the problem, it was on our salary side. Eh?
Salaries and
salaries. We have another one, general expense, and another one is bad debt. Yeah.
And the loan, interest on loan. What I did, I just took the interest on loan paid for.
No, we just account for 1 year. So on this side, I can drop this working out.
Before we continue.
Yes.
You said the interest on loan, we don't take the amount that has been given. So there is a figure that was given there.
Yes. You see that figure they are paid. Meanwhile, we could have deducted, if we want to get this value, we could have said they paid what? We could have said they pay 120. That was the value they have paid, right? And in a year, they should pay 135. 135. So meanwhile, when we take 135 minus 120, we will get what? 15. That's 15,000. 15,000. That is what they have not paid. That is accrual. So we have to add back. That is 15,000. So to give us the value of what? Oh, I should cut this one and paste it here. So to give us 135. So it is the same case. If you take the rate you have been given, you multiply times the total value, it will give you the same value.
You mean, suppose I could have taken 9% of 1.5.
Yes.
Then I less 120 from 135.
Yes, what they are paid, so that you know how much ilikuwa accruals. And you know, in our income statement, we normally add back accruals.
Okay, so I think those I only missed 1, 2, 3, 4.
Yes, so you missed 4. That's why I told you got a lot of marks. So if you miss 4, you got 6, and then plus the other one up there. See, you got at least like 10 points, and then they will say, because it is 8 marks, they will say the correct 10 point will be given marks. So you could have comfortably earned like 7 marks there.
So
a lot. Okay, so let's now do the balance sheet. It is the super enterprise. Balance sheet as at 1st March 2018. So here we will have a non-current asset. We will have cost. We will have accumulated depreciation. This is where I see you have a lot of problem. And then we have the net book value. We only recognize the when we say the net book value, we take the net book value minus accumulated depreciation minus depreciation for the year charge. So you didn't remove the accumulated depreciation. That was a big difference. So So we can start with the land. So land iko na cost ya
1
1 million. Remember, land, we have been told land normally appreciates, so they don't appreciate. So the total value of land that is 1 million. I will have 1 million again, yeah?
Yes.
And then we have building. Building, we have been given cost ya ngapi? Cost yetu ilikuwa 2.4, right?
2.4, yes.
Okay. Then tuko na accumulated depreciation. So accumulated depreciation itakuwa tumepewa 260,000. That is from trial balance. 260,000. We add the one for the year charge. That is ukienda building a income statement umepata
6,000.
96,000. Inakuja ngapi?
So 26,000.
So if you add 260,000 plus 96,000, you get 35,600, right?
But that was for building, eh?
Yes, the building depreciation charge for the year, if you see in our income statement, is 96,000, right?
Oh, yes.
Plus the next one, the one balance, that is 260.
Yeah, yes, absolutely.
To give us that 5,600. Then we take the total value, that is 2.4 minus the answer to give us 244,000. Should remove 10. That is the value of building. Then we have the equipment. Equipment, we have the equipment ningapi 220.
20,000.
And we have the accumulated. So accumulated depreciation for this equipment will be given as 103. We add 103. We add the equipment depreciation for the judge for the year, that was 55,000, to give us the net book value angapi. So I will take 103,000 plus 55,000 to give me 158,000. Then I take 220,000 minus this answer to give me 62,000. That is the value of equipment. You see, the only marks you got for the non-current asset, it is for land, because it was a free marks. And then we have the last one, motor vehicle. Motor vehicle, we have the cost of how much? 260. We have 260,000. And to get accumulated depreciation, I will take accumulated depreciation product forward of 135, 132, 132,500. I add depreciation charge for the year. That is the one we got 51,000. So I will say to get the net book value, take 26,000 minus 132,500 plus 51,000 to get 76,000. 500.
500.
And then, so I can now get the total value of my non-current asset here. Say sum. I will sum that one to give me that 182,500. That is the value of what? Non-current asset. Then we come
Total.
to current asset. Current asset with that with the inventory, that is closing inventory, which we will find in trial balance. Ilikuwa 25,500. Still. And then we have trade receivable. Trade receivable. Can you tell me what did you do to trade receivable? That's where there is a challenge again.
I took 400 less 33,042. Then I got 1068.
So now what now you get it from today, because we might not get that questions elsewhere again. So ukiwa umepewa, we have been given trade receivables, ndio?
Yes.
And then upate additional information, umeambiwa kulikuwa na bad debt written off. That one automatically will reduce your what? Trade receivable. So you have to less that one.
When you have been given? When you've been given?
When you have been given bad debt under additional information.
Yes.
That one will reduce our what? Our trade receivable. Let's open this. I want to do a small work in here. Trade receivable account. Umefanya ledgers, controls account.
Yes.
Yes, that in fact you could have done that one. So I want to throw a T account here. I want to do a small T account here so that you see. So here, nimepewa balance pro down, right?
Yes.
Yangapi?
1101.
1101.
400.
400. Kuna bad debt yenye tumeambiwa declare, tuachana na pro forward. Bad debt.
The bad debt
information yangapi?
5,400.
50?
Yeah? 400.
5,400. What is our balance carried out hapa?
Between the two we subtract.
Yes. So balance carried down juu hapa lazima nipate the total figure hapa ikwe 11,101, 104, 400. So it will be equal to
1051. 1051.
Is it 1051?
Yes.
I will take 11,4,100 minus 10,4. 1051 minus that 1 and 10. Hapa tumeandika na nini? We have allowance. Allowance for doubtful. Okay, tukaipata allowance yetu ilikuwa ngapi? That what?
Allowance for doubtful debts.
Ile tulikuwa tumecalculate ilikuwa that 1 530, right?
530.
Yes. So what is the balance carried down up?
Okay, 5,400 plus we add from 31 530.
You add or you subtract? So you take 10 11,001 400 minus 5,400 minus that 1,530. How much are you getting? Me, I'm getting 101 9470.
Yeah, that's it.
9470. So that is the what? the balance carried down. So that is the one I should put here. That is 101.9470. That is the value ningeiweka hapo. So ukishindwa na debt receivable, you open that account. Yes. So this is the value we are much interested with. So let me rough now this one.
So you take it direct?
Yes. Okay. After debt receivable, we have bank balance, that is an non-current asset, a current asset. Bank balance to corner 2245. Content. What else do I have? Repayment.
No, nakuuliza. Wewe yako ni pesa ngapi?
So we have that is, we have bank, I have indicated the bank, and we have prepayment, that is for insurance. Prepayment ya insurance ilikuwa 32,000.
Yes.
So do we have any other figure? I don't think so.
No, I don't.
No, and then we can comfortably get the total and current asset here. To give me that one, and I can get the total value of assets. So I will add this one plus this one to give me 47. That is the total value. And then I come here to equity and liabilities. So my equity and liability, I will start with the capital. How much is the capital? In trial balance,
1852. 52,500.
800. And then Nikona, do we have drawings?
Yes, we have.
So let's drawing. Drawing itakuwa ngapi?
320,000. Na mambo ingine.
320,000. Umesahau the additional information of number 3. There is a 46,000 at the general expense. So we add back that one.
Yes.
Give us how much?
That 320 plus 46.
Yes.
366.
366. And then we have the net profit here, ama net income. Net profit yangapi? Ilikuwa 71, we have it here.
713.
719.
719, 300, yes.
719.
300.
My figures is not what? 719. 300.
300.
Let me change my setting.
Okay.
That one now. So, but remember, we are lessing this one, so it should be in bracket. We have here non-current liability tulikuwa na 9% loan.
That is current liability.
Non-current liability.
Liability, okay.
And we have now current liability. So we start with the trade payable. Trade payable yangapi?
Accounts payable 762.
762. 800.
880. 880.
880, sorry. And so we have some accruals. Kuna accruals. Kuna accruals ya gani? So to answer na ile ya salary, unakumbuka salary ya 2 months ilikuwa 216 what?
2 salaries.
Yes, 216,000.
Yes.
Tukakuja na general expense. General expense ilikuwa 41.
General expense. Yes.
And then tukakuwa na interest on loan. Interest on loan ilikuwa 15,000.
Interest on loan ilikuwa
they have paid, the total amount they should pay is 135, but they have paid 120.
Okay.
Meaning there's a growth of 15. So you get now the total total equity. And liabilities. So I will take the sum of this one plus sum of this one to give me 47,488,800. So it should give us the same value with this one. Because this one is total.
Okay.
So that's how you would have prepared the income statement and balance sheet for May 2018.
Hiyo ingekuwa ngumu. Lakini I've tried.